So let's start. We had one session, I think it was in June after the election, and after that we are meeting now after probably around 4 5 months, right? So what has happened from there to now is, see, even then we kind of, uh, I don't know how many of you attended that particular meeting, but at that point we were very clear that the economic cycle is kind of going to top out probably in the next 2 months, 3 months, 5 months. No one can actually pinpoint and say, okay, this is going to happen after 3 months, right? But that is what, if you look at it, that's exactly how it has played out. So if you look at the economic cycle, we are somewhere here, right? Wherein the GDP is slowing down. If you look at the India's GDP numbers also, it is contracting. Whereas the CPI inflation, the inflation numbers that came in October, right, it is rising. So we are in this phase as of now. So right from 2021, this recovery started and then expansion happened in 22, 23, 24, right? But now at the very end, or let's say the second half of 24, this is what is happening, right? So every uh, economy goes through a cycle of expansion as well as contraction. This happens everywhere, right? No matter in a 10-year, 20-year, 40-year bull market you are in, or let's say the economy is going to grow, right? You are going to have these cycles, right? So in an rising or an, let's say, expanding economy, people tend to buy more stuff because, let's say, more people are having good jobs and things like that. So the consumption keeps on rising. Capacities are added by most of these industries. So that expansion phase lasts for a while. But then few of these stuff are cyclical in nature. For example, let's say a middle class family buys a car, right? So in that 2 3 year period when everyone is doing well, all of them buy cars, right? But no middle class family usually keeps on changing cars every 2 3 years, right? Right. So a few of these stuff are cyclical. So because of that cyclicality, what happens? Naturally, after a certain rise, we see a slowdown and then usually a recession as well. All right. So that has to do with even the monetary policy of the RBI and even the global central banks, right? So we are somewhere in this phase right now. So if you look at the June quarter results, excluding the banking sector, the results were flat. All right. So now, including the banking sector also, the results for the large caps, that is Nifty 50, have come in flat, right? So we are somewhere in this period wherein you are seeing flat kind of a results, right? So that is the reason why you are seeing so many downgrades happening. All right. So what do you mean by downgrades? What had happened was people were forecasting that this run is going to continue up to 25, 26, 27. So based on those projections, like the earnings in 2026 would be so and so. So based on that, they would have forecasted that the stock should be at this level and would have given targets. Now that the market has, let's say the economy has started slowing down and they are seeing that the earnings are not rising, they have become flat. They have not started falling yet, but they have become flat. So this is the first indication for the big guys to say that, okay, now economy is stalling because economy can't keep on moving up continuously like that, right? That is the reason you have seen a 10% drop in the Nifty in the last, let's say, 3 odd weeks, right? 3 or 4 weeks. So this is basically not just money moving out of India to China. That is what most people are blaming at, but that is not the real reason. The real reason is consumption is slowing. If you look around, what is happening is from the FMCG numbers, from the automobile sales numbers, or even let's say the real estate, the premium segment continues to grow at a rapid pace. So, who buys these premium stuff? If you look at most of these contractors or businessmen, they have a lot of money and they don't mind even a 7% inflation or a 10% inflation. They have money, they go out there and spend, right? It hurts the, let's say, middle class, lower middle class, poor, right? So, the consumption of those kind of stuff, right? The normal, let's say, the groceries and all of that, that has not been rising, right? Or even let's say an entry segment passenger car and all of that, you are clearly seeing signs of slowdown, or even affordable housing and all of that, right? So since India is 60% a consumption led economy, if the consumption itself is slowing down, naturally the GDP is also going to cool off, right? So looking at all this, the FIS kind of did their homework and they're like, why should I pay 24 times of FY26 earnings? Because everyone was forecasting the earnings are going to go up. What if the earnings start contracting? The Nifty EPS is going to fall by, let's say, 10, 15, 20%. If the Nifty forecast is, let's say, contracting by 15, 20%, naturally the current level at which Nifty is trading would be at a higher P, right? And to be honest, the Nifty PE that most people are comfortable buying it would be around 19. Anything below that, they would say undervalued. Anything above that would be overvalued. So the analysts, as per the current forecast, if you take into FY26, the Nifty is trading at 24 kind of a P. So that is the reason why they are like, okay, we want to sell India and move this money somewhere else, right? Because when earnings are contracting, we don't want to be invested here at such high valuations. So first, what you see is the large caps being sold by the FIS, all right, because they feel that after, let's say, from December quarter or the March quarter, you are seeing going to see even bad results from these major companies, right? And then that is going to trickle down to mid caps and even small caps. And most of these mutual funds, what they do is, once they feel that okay, now earnings are going to cool off rapidly, they are going to shift their money big time from these mid and small caps to large caps. Because large caps, if they crack by 15, 20%, small caps, especially the fundamentally not so great or okayish ones, right, they crack 40, 50, 60% as well. So to make sure they don't see such drawdowns, the mutual funds, they start moving away from these small mid caps into these large caps. So that hasn't really started yet. That fall is still pending. Now it is just the Nifty correcting. Nifty might correct and let's say it would start consolidating at a particular level, after which you would see the real pain coming into mid and small caps, because the earnings are going to cool off there, and whichever stock is kind of trading at crazy valuation, they are going to be beaten down really bad, right? So we'll talk about that uh, eventually, but this is the economic cycle. Any questions in this economic cycle thing, if you want to ask?
Sir, right now, Pradeep, here, we are
Yeah.
into slowdown phase.
Mhm.
So that means after this, there will be some more pain. And this duration, whatever you have marked in the chart,
Hmm.
so at least it might be 6 months, 8 months, 9 months.
Right.
I mean, in that
Huh.
duration, right? It's not like just 1 month phenomena or something.
No, no, no. So
It
it
might
is
be
not.
even, it
Huh.
might be even 1 year phenomena, something like that,
Correct.
right?
Correct. So usually it plays out over a year, but it depends on how the central banks manage it, Pradeep ji, right? So if they are quick and the decisions that they take are really good, right? Probably in a year's time we might start to come back. But let's say if they are not so great, probably it can even last up to a year and a half as well.
So 2025
Is
might be
probably going to
not
be a washout year, something
year.
similar to 2022, right?
Okay.
So we'll look at that as well. Uh,
Please don't remind of 2022, sir.
22 was nothing. 2019 to 20 was the real pain. I'll show that figure as well.
Yeah, yeah, that COVID one was that was huge.
नहीं नहीं कोविड से पहले ही प्रदीप जी. Yeah. Any questions anyone has on this
Yeah,
economic cycle?
so
Yeah.
yeah, so does this also
Mhm.
trickle down into the sectors where there is a lot of investments are going in, and some of the companies which are fundamentally strong in those sectors
Mhm.
are posting some good results?
Right. Yeah, so I'll touch upon that later, but to answer your point, right, there are going to be companies that are still going to do well, still going to hit 52-week high, even during this downtrend. And that is where we would want to kind of focus and play. All right,
Okay.
it is not like everything is going to fall. In the initial part, yes, everything is going to fall, right?
Okay.
Everything is all going to crack by 10, 20%. But after that, once the recovery starts, or let's say there is some consolidation, the stronger ones would start to move higher, and that is where we will also start focusing on.
Okay. Got it. Thank you.
Sir,
Okay.
just one very quick question. So this, I mean, whatever the chart you are showing, this is like kind of a phenomena of only Indian markets, or
No,
it's like
no. Huh.
global?
This is for global, but if
Okay.
you look at the Indian markets usually have a 3-year bull cycle followed by a 1-year kind of a proper bearish cycle. So if you look at 2022, 2022 was not really a bear cycle. All right. It was just a small dip because the RBI started squeezing out the liquidity. They did that CRR hike, which took out 85,000 crores from the economy and things like that. Right. So that was the pain. But we were still in that expansion phase for the 3 years from starting, let's say, end of 2020 or starting 21 all the way up to 24. Now that cycle is coming to an end. So that cycle similarly happened from 2015, 2016, 2017, and then from 2018 to 2020 is where we saw the down cycle, right? So let's talk about 2022. Okay. Dinesh, you wanted to ask something? You raised your hand.
Sir, please put in the presentation mode so it will be much clearer.
Sandeep ji, I had a
Thank you.
question on the previous slide.
Mm-hmm.
So, the economic cycle which you mentioned, right?
Mm-hmm.
So, I mean, somewhere I read, I mean, I'm not sure how much it is true, but in India, at least the capex which the government did was lesser than expected because of these elections in between.
Right.
And their projection is that they will do much more in the second half, because of which the growth will come in. Secondly, the inflation, which is kind of holding RBI back from raising this rates or dropping the rates rather.
Mm-hmm.
So that also might happen because you saw this comment from Piyush Goyal that don't just look at food inflation. There are other things to look at. Do
Right.
you think any of these will have an impact and will actually see a good capex coming in from the government, resulting in growth in the second half?
So that only time will tell whether they do it or not. But in the budget also, I think the allocation wasn't that great. If you look at it, I am going to cover it in the coming slides, if that is fine.
Yeah, yeah, sure.
Okay. Yeah.
Sandeep,
Okay.
I had one question which was
Mm-hmm.
extension of previous questions.
Mm-hmm.
Now, somebody asked about the companies which are posting good results this quarter also.
Right.
So, should we wait for one more quarter to see if they are posting good this and start investing even if the broader markets are probably going down, or we should wait for broader markets to recover and then invest in these stocks?
So, ma'am, if they are available at reasonable valuation, right? So when I say
Yeah.
reasonable valuation, let's say somewhere in that 20-30 range, or historically what has been their average. Although in the last 3-4 years, if you look at it, the PEs of most of these stocks are trading at a much higher valuation, right? So maybe take a 10-year period of these stocks and what is the average. So if it kind of comes back to those averages, right? The valuation, maybe it can be 30p depending on what stock it is, right? Around those levels, if the results are stable and not contracting much, right, then you can slowly build a position. Don't be in a hurry. All
Yeah,
right.
because see, what I've observed from this quarter is that because they have posted good results, the PEs have come down.
Mm-hmm.
But as you said, if we have to see whether earnings are stable or not, so wait for one quarter, see if the PEs are coming down further,
Right.
and then probably take a call on investment. Correct?
Right, ma'am. Right. And
Okay.
whatever you want to build, let's say, don't be in a lump sum mode. So slowly
Yeah.
build it over the next 6 months, 1 year period.
Yeah. Got that. Got that.
Yeah.
Thank you.
Sure.
Yeah,
Yeah.
Sandeep,
Yeah.
just addition to the this previous thing. One thing we learned over the years, something called PE contraction.
Right.
So, what I have seen, it is just an observation over the years. It is very fructifying for me as well.
Mm-hmm.
During the when earnings are good, but your price is going down, basically you have seen a PE contraction.
Right.
So when you have a good earnings, what price is going on, when we get a breakout from these kind of scenarios, when now the PE expansion starts, I think that is a good time when we start the accumulation. So just
Right.
to difference from my end.
Right. So P expansion is what makes that crazy return, right? So if you're lucky
Yeah,
enough to buy it, or let's say you analyze it properly and buy it during the P expansion, that is when you make the maximum money. If you're
exactly.
caught on the wrong side during a P contraction, right, you end up losing a lot of money, right? Even though the earnings are growing, but let's say the P contract. Why do P's generally contract? Is because in a bull market, what happens? The money is so much that they keep chasing the same kind of stocks, and they push it to a abnormally high level. Let's say 100 रुपए का note है, right? That 100 rupees note value would be 100, but people start bidding it for 110, 120, 130, right? People are willing to buy a 100 rupee note at 130 also. So even though probably inflation हो रहा है, it is becoming from 105 to 100 to 105. But then because it is at 130, it is still going to contract, correct? It is going to come back to 105. So during that phase, if you're caught, what will happen is you will end up losing a lot of money, right? Understood?
So, Sandeep,
Yeah.
what I meant was that
Mhm.
the P contraction is not because there is a re-rating downside. It
Mm.
is because the P expansion is not happening because right now everybody is in a fear mode.
Right.
But the profits are higher, and because
Mm.
of that, the expect has come down. This is what I meant.
Uh, right, ma'am. So the P might even further cool off.
Okay, got that. Yeah,
Okay.
yeah,
Yeah. So until they come to an average where people start feeling like the investors, they start feeling that, okay, this is a good enough region for us to kind of start buying. The valuations are decent enough for us to start buying. For
hmm,
example, if you look at most of the PSU sector companies, right? From
yes,
15, they have gone all the way up to 35, 40, right?
yes,
Historically, the best valuation for them was 15, right? Now, do
yes.
they come back to 20? Do they come back to 15? That only time will tell. But let's say if good because of good earnings and price coming down, they have dropped from let's say 40 to 35. These investors are not going to be excited because it has come down from 40 to 35. Probably it might excite them at 15 or even lower.
Yeah, got that. So we
Yeah,
look at average and then take a call.
right, ma'am.
Yeah. Got
Okay. Yeah, clear. All right, then. So I'll move on to the next one. So what happened in 22 and how most of them played in that 22 period, right? So few of them, they kind of shared their portfolio also with me. So Rishi was one, he showed that he made like 25% kind of return in this period from here up to this level. We were in a downtrend in that 1 year period, right? Even someone like Gaurav, he had said that he made 15%. What is the average other students have made? So I never asked us other students what was the average that they made, but whoever shared it with me, it was decent enough because what I had seen was most of these people who follow other methods, right, they were down 20, 30% also. Most of them who were heavy on metals had cracked almost 40, 50%, right? So how this method has an edge is, so if you go back and see the data was very, very strong here in February when that war thing kind of broke out, right? From there, it kind of went up almost 15% from those levels, right? So if the index itself moves up 15%, naturally the stocks will also move 15, 20% up, right? And then again, we saw distribution happening around these levels. We had a pretty decent fall from 11,000. We came all the way up to 8,000. So that was a 27 odd percent kind of a crack. Again, decent accumulation and then a 15-20% rally from here, from 8 to 10, 25%. That is. So what we should do, let's say if you're an investor, then you can't do much unless you want to exit and then buy it back at a lower price. But if you're someone who's having it for the long term, just be invested. If you're someone for the medium term, you have to get out at a point where it is going into stage 3 or from stage 3 to stage 4, because You are going to wait it out, wait for the stock to go into stage 2 again, or let's say from stage 1 to stage 2. That is where you'd want to buy it again, right? Because every single day, or let's say over every single month, you are going to see that the slowly the investment is kind of moving down, 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 because the market itself is in a downtrend, right? Here, if you are a trader, wait for strong accumulation, wait for the momentum to move up. It is going to give you these 10, 15%, 20% kind of bounce. You are not going to get a trade every single day, every single week. Probably once in 2 months, once in 3 months, you are going to get good trades. You are going to capitalize on that, make that, try making 15-20%. If you had already played the 2022 downtrend, probably you can look at even 25-30%. Even in a downtrend when most of them are losing money, you can still end up. Only thing is, don't be in the market all the time. Wait for it outside. Whenever the data and the momentum improves, that is where you jump in that 10% rally. If you the right kind of stocks you choose are right, you end up making 15% also on your stocks. All right, this is how most of them played the 22 downtrend. Any questions here? So this was 2022. 2022 was not really that painful, in the sense it was hardly for a year, right? And then we started moving up higher. Now going back to 2018 to 2020, right? This was the period wherein it kept going down, down, down. So if you see here, January 2018, that is when most of the distribution happened, because Mr. Jaitley came out with the budget wherein they introduced the long-term capital gains, right? So after that, the market started correcting, and it was in a correction phase all the way, probably let's say up to here. But after then, COVID happened. This was a like once in a several decades such a thing happens. But if you look at it, a good 2 year period we were down, right? 2022, hardly 1 year we were kind of down, and then we started to recover. But this was a 2 year period wherein the economy, which was expanding from 2014, 2015 to 2017, started cooling off, and a lot of financial issues were also started happening. A lot of NBFCs, banks like DHFL, Yes Bank, they went bankrupt, and things like that, right? So financial stress, liquidity stress was also very high at that point. Now, we'll have to see whether that happens in 2025, because already most of these banks have started showing signs of weakness, especially in personal loans. The recovery is not happening. Even in the credit cards, the people whoever have taken it, that recovery is not happening. Even these microfinance, if you look at something like Credit Access Grameen, fantastic company, right? And their ticket size is also quite low, I feel. Lakh and a half kind of loans they give, right? Even they have corrected from a high of, let's say, 1600 to 800. Yeah. So especially in the microfinance, there is a lot of pain, and these microfinance companies would have borrowed it from the banks. So eventually the banks are going to be under stress. If the financial system itself is going to be under stress, then you would not be seeing people taking loans, buying stuff, right? If people are not taking loans and buying stuff, definitely the consumption is going to cool off even further. And with the RBI rates, probably is going to be at a higher level until February, unless, let's say, even the December January data is above 6%, that is the CPI inflation. Probably they might even push it further to beyond February, probably March, April, right? But as of now, the rate cut hopes for December is completely gone. No one is expecting a rate cut from the RBI happening in December. So the only other thing that is, I mean, the next one after December would be February. But would the economy continue to stay at the same level until February? That only the coming results and the data would tell us. All right. So even in 2018 to 2020 period, if you look at it, were there spikes? So if you look at it here, there was a bounce. From here also there was a bounce. So these 10% kind of index bounce keep coming in. All right. So we have to capitalize on them. look at which stocks, which sectors are kind of showing accumulation, and place park our money in those kind of stocks, make that 10-15%, or let's say even 7-8% is good enough. Take that, sit out. All right, don't be too greedy. Even if you do like a 5 to 7%, 3 to 4 times a year, right, you'd still not end up making 20% for that particular year. All right, when everyone else is usually losing money. All right, so more weightage. What happened in the last few years, whatever you bought, even though you didn't have a stop loss and everything, you still ended up making money. Why? Because even if it corrected 10-15%, because the market was moving up, eventually it went higher, right? But that won't be the case going forward. If you don't have a stop loss or you don't exit it on time, the stock is going to go much lower than your buying price. All right, so you have to be disciplined. You have to make sure you have a proper stop loss in place, and also once it gives you that 7-8% kind of a profit, trail your stop loss. After making 7-8%, don't end up losing all that profit. All right, at least block it at 5%. All right, worst would be a few people, they kind of keep expecting more and it goes up 8-9%, and then it goes down 8-9% in the red, right? Never let that happen. Worst would be after making 5-6% profit in a trade, the maximum would be you are going to exit at break even. You are not going to lose money after making money in that. Okay, so be a little disciplined and play the market in the coming days. All right, any questions here on this particular chart that you want to ask?
Yeah, in the current scenario, if you see our data, the accumulation and distribution data,
Mm-hmm.
so we see that a lot of pharma stocks are getting accumulated,
Right.
right?
Yeah.
And if I see the PE of those pharma companies, any pharma company, there are
Mm-hmm.
around 100, 200 and something like that, but
Right.
still they are getting accumulated,
Yes.
no matter what. So what I see is pharma is having such a huge positiveness because of the laws that are going to come with respect to the US and China
Right.
plus one strategy and all, but still they are getting accumulated and they're going up against the market trend. How do we play those? Means when you are trying to invest, so say thinking in terms of an investor, not a trader mindset.
Right. So, in case if you are investing in such stocks, right, best would be something that is still in stage two and you're seeing
Okay.
very good accumulation around the 30 WMA line, right? Those would be the kind of bets that you would want to take. And just a little note on pharma, like you said, because of the China plus one strategies, a lot of people are thinking that the CMO kind of stuff comes to the Indian manufacturers who have pretty large capacities unutilized, right? And also in the recently, what has happened is since a lot of new drugs are coming in, the value of these new drugs is pretty high, because of which a lot of stocks have given very solid set of numbers. And one more thing that is happening is because of these chemical prices cooling off, right? To make these APIs, the chemicals, whatever are needed, right? Those have cooled off rapidly. If you look at something like Davies Labs, fantastic results. Why? Because the raw material has cooled off so much, but the pricing power is still there. So they have not reduced the product price because of the raw materials becoming cheap. This is one advantage that the pharma is going to have. Plus, rupee is also weakening, right? And pharma is something that, let's say, we will not lose our this thing to something like Bangladesh or Vietnam. Bangladesh and Vietnam can do take away our textile manufacturing, but they can't take this API because it's a complex stuff. You have to have the expertise and the technology to produce it. It is not like any more country with cheap labor can do it, right? So that is the reason you are seeing good accumulation happening in the pharma sector.
Yeah, and their valuations are high because their operating leverages to this upfront capacity addition, and then they are not using the capacity to the full right now, and then the future expansion with respect to the CDM and everything is going to go on. I think that's where this kind of bullishness in the pharma sector is coming in.
Right. Right. Yeah. So there also it is a little difficult to know that okay what is the exact this thing valuation. But best thing would be in case if let's say the company is still growing, you can use the PEG matrix which Peter Lynch kind of gave, right?
Okay,
If
okay,
the growth is at let's say 40%, they're still growing at 40%, then up to a 40 P you say that okay it is reasonable, right?
okay,
So that matrix you can use there.
okay.
Yes, Sandeep,
Yeah.
one challenge that I see for pharma
Mm-hmm.
is that this Donald Trump has said that there would be some crackdown on pharma companies. So there could be some pricing pressure on US guys, which may percolate to Indian companies also.
Probably those who are not into APIs and stuff, maybe there it can crack down, ma'am. But since see, there are only three major players of APIs in the world: China, India, and I think it is Italy, right? So maybe India has 15-20%, Italy has 10, and the rest 60% is with 60-70% is with China, right? So if you want to make those drugs, probably those drugs who do the final dosage there in the US, for them it might hurt. Okay,
Okay.
if someone
Correct.
is
Not the
making
CDMO place, but the LPM formulations. Those are the place that it is hard.
right, right. So you have to kind of see that see all pharma stocks are not going to do well. You have to see which one is actually benefiting from this, and you have to play them.
Okay.
Yeah,
Sandeep, one question.
yeah.
Yeah, you talked about like this MFI space is having stress on account of the loans not getting recovered,
Hmm.
and also these loans are taken also from MFI in turn is also taking loans from the banks.
Hmm.
So will the MFI not pay the banks, and also banks exposure to the MFI space will also turn sticky? Is that what has been happening in the past as well?
Yeah, so if you look at it in the first 6 months, right, until October, there is actually a
Yeah.
contraction from last year's numbers, right? The bank's exposure to these NBFCs has contracted by 10%,
Okay.
right? So that is also causing this slowdown that we are seeing, right? Because usually people take on stuff like Bajaj Finance and those kind of loans they usually take, right? So if Bajaj Finance
Hmm.
itself doesn't have the money to give it forward, then again, like they're not really, I mean, giving out loans that in that rapid pace that they used to do, right? Maybe nowadays you are getting lesser calls from these Bajaj Finance guys also,
Right.
right? Yeah, because
So yeah. So the question is like, there will be a slowdown in the entire space because there will be less lending and there will be less financing by the banks to this NBFCs and MFIs.
right.
But at the same time, I wanted to understand like will the NPS cycle will also move from the MFI to the larger banks? That what we anticipate?
So that can
None.
also happen depending upon who has lent so how much to that particular sector, right? Usually it is most of these PSUs, right? So
Yeah.
there, the worst of the this thing, right? Uh, what do you call that? The loans for to someone to take a loan from a PSU bank is probably much easier than from a private bank, right? And
Yeah.
most of the times, even this, if someone is your relative or there is a political pressure, also they kind of release the money. Yes, so
Right.
PSU banks would have the most stress because the lending there is horrible. Anyone can take money from them, and then if they don't kind of pay it up, they'll also be like government ka paisa hai, it is fine, right? So,
Right.
if you ask me, most of these PSU banks would be under a lot of pressure once the if NPAs start to rise. As of now, because the contraction in the economy hasn't happened so much, we are just starting. There is a very slight increase in the NPAs. But let's say it slows down even further, you would see a big NPA this thing cycle again moving higher.
Right.
Mm-hmm.
And as you rightly mentioned, like the personal loan space is also getting stress and recovery is, and that's being felt very well.
Mm-hmm.
One of the recent news which I read somewhere in the Twitter itself, like was that KV Kamath in one of the recent interviews,
Mm-hmm.
he has mentioned that almost 1.5 lakh crores of
Mm-hmm.
personal loans
Mm-hmm.
is expected that has got diverted to the stock market side.
Ah, okay. Okay.
So that's something which was a very startling number.
Right.
In
Right.
case that is true, if even if
Hmm.
that number is half or whatever,
Hmm.
the number itself is so high,
Yeah.
and because the market itself is going down, that
Right.
can create a ripple impact on the personal loan side.
True. I completely agree. Yeah. So
Yeah,
additional to that, the this thing, what do you call MTF, margin trade fund, that also is some 85,000 crores. So if what you are saying 1.5 lakh,
1.5
1.5
lakh
lakh,
crore. Yeah,
yeah, 1.5 lakh crore plus 80 or 85,000 crores, that is close to 2.5 lakh crores, right?
yeah,
So once that comes under stress, probably you'll see the mid and small caps, because most of these guys play that itself, right? No retail investor will go and buy a Reliance, maybe very few, probably 5% of the portfolio, right? But majority of it would be in the small and mid caps, right? So once
yeah.
that money starts going out, you will see a lot of damage happening in the small and mid caps, especially the fundamentally not so great ones.
Yeah, so just from a direction perspective, like the banks are still holding
Hmm.
from a market, I would say drop perspective.
Hmm.
So,
Right.
but all this news and all this even pointers which are coming out,
Hmm.
ideally one should reduce exposure to the banks. What do you feel, Sandeep, on this?
So, yeah, I would agree with that. But usually the good ones, they kind of shine in such periods.
Hello, Sandeep sir. A
Yeah.
question around accumulation and distribution. So we have seen that a lot of pharma stocks and a lot of hospital sector stocks
Hmm.
have seen good amount of accumulation,
Hmm.
and they're decently valued also. They're not overvalued. So you
Right.
mentioned that even 7 to 10% gain
Hmm.
uh, should be booked. I mean that's what I think you said. So even stocks say Yatharth Hospital, which has seen such good accumulation over past 2 3 months,
Hmm.
has done capex, has acquired other hospitals, has increased capacity, etc. And
Right.
the growth, I mean, like the future
Hmm.
earnings are, I mean, are there. I mean, like
Hmm.
to see for you. So even in those stocks,
Uh-huh.
we should not expect a 15 20% or 50% moves that we were seeing in last 1.5 years, even if
So,
there's strong accumulation.
so stocks like that, which are reasonably valued, can still move. So you're not trading them, right? You are kind of more positional, or let's say a few quarter kind of a play there, correct?
Right.
So those you can continue to hold. If you're doing, like, let's say the short term trading that you're doing, that
Yeah.
especially if the stock is already below the 30 WMA line, there you have to kind of be happy with a 7 to 10% kind of thing. If your stock is already above the 30 WMA line, which means it is still strong, there those kind of stocks can give you 15-20% moves also.
Okay.
Okay. Yeah. And if you're playing something for, let's say, the medium term, right,
Mhm.
then don't worry so much on the smaller corrections, because you are playing it, let's say, for next few quarters, wherein the earnings growth is continuously improving, they're doing capex and all. Then you don't have to worry too much about the short term, let's say 5-10% down move,
Okay.
right?
So.
If you want to average them up, right, probably let's say you bought Yatharth at 400 or 500, right?
Mhm.
Now it is, let's say, at 600, and now it corrects to 550. So again, if you see accumulation and then it is still above the averages, moving averages and stuff, you might want to again add more of it at that level, the
Okay.
pyramiding. Yeah.
So even if the market is down, it doesn't matter. A good stock has a higher tendency to go up if it's respecting the principles that we have, like with
Right.
moving averages and everything.
Correct. And also what happens, the mutual funds who are getting these SIPs, right, SIP money, they might start to buy such companies, or let's say most of the traders will also start focusing on those stocks which are technically strong, right? So let's
Hmm.
say now in the bull market, you have thousands of stocks baking out and everything. So naturally, the money will get distributed almost equally, right?
Right.
In a bear market, if only 10 stocks are giving you a breakout, what will happen? All that money will start focusing on this only on those 10 stocks, correct?
Right.
So usually in a consolidation or in a bear market, the ones which are showing strength, right, the jump in them would be much, much higher.
Okay.
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 Yeah.
So
Right. So
Sandeep, this is a market for wealth creation in future, correct? Because if we
Huh.
buy at right price in say 2 or 3 quarters or maybe 6 months, then we
Hmm.
can really generate good wealth in probably after 3 4 years.
Right, ma'am. If you are able to buy like very good quality names, right? And even
Right.
during this correction period also, let's say a smaller company is doing extremely well, right? Then start deploying money. It need not be like, okay, I have to wait another 6 months and only then deploy it. If you see that the cash flows are clean and the management is also decent, the kind of product that they are making is also good, right? You can
Right.
start buying them as and when you see these companies coming out with very good set of numbers. You need not wait, is what I'm saying.
Yeah,
Because
got it.
yeah, until market kind of stabilizes, these might have already run up 30-40% based on their fundamentals.
Exactly. Yes.
Okay. Yeah.
so historically, have you seen any stock giving multi-bagger returns during a bear market?
So usually in a micro cap that can happen, or let's say a smaller company which is having some niche and that particular segment is kind of growing, right? But
Okay.
in a already established company, it becomes really difficult unless they're coming out with some new technology and things like that, which is kind of making their earnings grow,
Hmm.
right?
Okay.
Why a smaller company would still continue to grow is because the size itself is small, right? So
Right.
irrespective of how the economy is doing, because of their small size, they can continue to grow and probably grow at even 30-40% a year.
Right. Got
Yeah.
it.
Yeah.
Thanks.
Or a sunrise sector where the
Huh.
I mean, which is going to really blast in
Right, ma'am. But to be
coming
honest,
years.
all the sunrise sectors are now trading at peak valuations. You
Yeah,
can understand?
extremely high valuation.
Right.
Solar, I was trying to buy something in solar this extremely high valuations. I
Yeah.
mean, nothing cheap.
Yeah.
But I think for the solar APCs and all, I think Jansol is pretty well placed. But with all the not many institutions coming in, it's looking very dull.
Right. I think Gensol, the promoter itself, bought in the previous week, if I'm not
Yes, he
wrong.
did.
Yeah,
He
he did,
bought
right? Yeah.
twice. He bought twice, not
Correct,
once.
correct. Twice, yeah. 13 and 14.
Yeah,
So
exactly.
usually, like this is something that I keep telling most of the students, right? When a promoter himself starts buying after having so much stake in the company, it's a clear-cut indication that within a year, year and a half kind of a time frame, you should be making decent return on that particular thing. Okay.
But I think recently, 3 4 months back, I think
Mhm.
there was that Hurry app or something. I think he was buying Gensol shares.
No, that
So we
was the
don't even
genuine
know
case.
whether
Even
it is a
no,
pump
no,
and
no.
dump and whatever.
Even Balu Forge had that same thing, right? Balu Forge, Chansol,
Yes,
and everything
Balu
was
Forge.
there. So that he was an investor who is coming from outside and buying. It has nothing to do with the management. Management was not pulling those guys inside. If you see, Balu Forge went down to around 205 in that period of time, but then it bounced back to what? Now you see around 700, 800.
Right.
So it has nothing to
Yeah,
do with that. Yeah, that was
correct.
genuine case which has happened, which has nothing to do with the management, good companies management. And then if you see the guy who bought that has bought very good companies. See the list of the companies he has bought.
Mm. Yeah, only I haven't had a look.
Yeah, all the companies what he bought are very good companies. I'm not
Okay.
talking about Jansol or just Bollywood, but other companies are also very good.
Okay. Yeah. So this is about the 2018 to 2020 period. So you are going to get opportunities, but you have to wait, be patient, and then play. Be happy with, let's say, 5 odd percent kind of returns, especially something that is below the 30 WMA line, because you are only playing them for that short bounce. All right. If you do want to be playing it, or let's say you're not convinced, stay out. Even if you don't lose money, you can invest all of that once we may, I mean, come into some kind of a consolidation or a range kind of a thing, wherein it is not falling further, it is just moving sideways. All right. Yeah. So a bigger pain point would be, now we have 17 crore demat accounts, right? So almost 11 crore of them have come in after COVID, right? And people after COVID have never seen a bear market, like a proper bear market, wherein one day you're hearing that there are so much NPAs happening, another day you're hearing that the consumption has become really weak, right? So the market continues to crack no matter how good the earnings are. So initial part, that is, you are seeing that the earnings are pretty decent, but you're seeing that the price is correcting. Why? Many people are saying that, right? The earnings are better than what we have seen, but still the price is cracking because the market is trying to figure out what the earnings will be after 2 quarters, 3 quarters, right? It is not reacting on the current results, right? On the current results, it reacted 6 months ago, right? Market is now looking at what will be after 2 quarters, right? So once this correction actually starts, so everyone was so used to buying the dip because Nifty never had a 10% correction, right? On that 2024 June election day, right? Just one day and the next day it bounced back, correct? So everyone who bought even that dip are like, okay, I made so much money. And now also similar thing is happening. People are going out there buying more, thinking that it is going to bounce. But if it doesn't bounce, right? And all this personal loans, what someone mentioned, right? 1.5 lakh crore plus the margin trade fund, all that would be under severe pressure, right? And if that starts to unwind, right, it will cause, even it is more like a snowball effect, right? The smarter one will get out at the top, right? The one who's hopeful that nahi abhi bounce aayega, kal aayega, parso aayega, will end up losing most of it. All right. So you don't know if you say that the retail buying that is continuously happening is going to be there for the next 1.5, 2 years also, even if there is a 45, 50% crack in the mid cap, that would be absolutely remarkable. I don't think that has ever happened in India, but that looks difficult, to be honest, because वो फेमस डायलॉग है ना, सब कोई इन्वेस्टर नहीं होता है, सब भाव के खिलाड़ी है, from that scam 92 thing. That is very true. As long as you see profits on the screen, people are happy. Once it starts going in the red, that is when they start panicking, right? So it is going to be difficult for them also, right? Unless you are just trading, looking at this. I think most few of you are here are also the ones who have come in after COVID, right? Take it slow, don't be really aggressive, right? Even if you don't make much money, let's say you make only 7%, right? Good enough. Don't lose money, because whatever money you have now, if you buy the right stocks at the end of this bear market, you are going to make a lot of money after 2 3 years from that, from the next bull run. All right. So after that, no rate cut until February. If the inflation stays elevated, even let's say in December, January, probably that rate cut might be delayed even further, right? Which will cause additional things. Like someone mentioned, right? Piyush Goyal is asking the RBI to kind of do this, that, right? But to be honest, most of the RBI governors will not listen, right? Same thing happened with Urjit Patel also. He raised the interest rates from 6 to 6.5 back in 2018. They just removed him, right? So this is what keeps happening, and chances are the governor is not going to listen to anyone. They know how to manage it, right? If inflation stays elevated, chances are they might delay it even further. More, something that is more worrying is if Trump, right? Let's talk a little on the geopolitical thing. Trump, he's talking about tariffs and stuff, right? So if he's going to put tariffs on China, or let's say even a little part on India, all the imports are going to become expensive. So naturally, the inflation in US is again going to rise, right? So if inflation in the US again starts rising, which is currently, I think the Fed rate currently stands at 4.75 to 5 or 4.5 to 4.75. If US itself is at 5, right, the repo rate, India can't bring it down from 6.5 to 5.5. Let's say I'm a global investor. I look at Indian bonds giving me 5.5%. I look at the US bonds giving me 5%. Would I be interested in going and buying Indian bonds wherein the rupee might deteriorate even further, might hit, let's say, 90 in 2025? Or do I buy an US bond wherein chances of the dollar index becoming strong is even higher? What do you think most of the global investors will do?
Stay back by US bonds, definitely.
US bonds, right? So if Indian government itself is not getting money, then they can't really run the show. That is, they can't manage all these expenses, whatever they have, right? So I don't think even the RBI is going to be really aggressive and start cutting. Two things. One is how are the US rates? Second is how is the inflation back home, right? So things are definitely getting tough. Whatever seemed very easy in the last 2 3 years, definitely it is changing. So even our expectation from the market should also cool off, right? You can't expect the same 25 30% I'll make from the market in the coming years also, right? Any questions here? So earnings are expected to remain flat or even contract for the next 2 3 quarters, because even the base was pretty high, and now because the consumption has started to slow down, you are definitely going to see a earnings contraction. So all this forward PE thing that we had done right previously, taking into account 2026 earnings, 27 earnings, all that now kind of goes out of the window. You are going to look at earnings degrade, or let's say downgrades, wherein you are going to adjust the stock price accordingly. So then, moving on to the next one. So the government spending that has slowed in the first half of this year, right? So that is the reason you are seeing crazy cuts in infrastructure, defense, and railway stocks. So what was happening is since 2021, every year the allocation for these sectors, these three sectors, because the government was in a big capex mode, right? So every year, if they are allocating 25 30% higher, naturally what is going to happen? The stocks are going to grow at that 30 35 40% kind of growth which we saw. That is why most of them rallied. And now, because it has slowed down, they are not getting fresh new orders and things like that, they have started seeing a flattish kind of a result. Now, when you see flattish, or let's say in the next 2 quarters, they might see a even contraction in their earnings. You are not going to give them 40 50 P, right? So if you even apply the PG ratio, let's say it is going flat or 10%, why would you give it a 40 P for that particular thing, right? So that is why most of these are under a lot of pressure recently, because the government spending until in the next budget, let's say in February, she again allocates more funds into these sectors. I don't think they are up for a rally. Until then, they might just consolidate or slowly correct as well. All right. So this is about the PSU stocks. So usually, like this, I think we already touched upon. So it's in a bear market, it's just not just the cooling of earnings that hurts. Generally, it's the PE contraction, right? So even if let's say the earnings degrow by 10% in a year, but the PE contracts from let's say a 60 to 30, right? So that is a good 50 60% kind of correction in the stock price, right? So this is something that one has to be careful about. If you have a very high P, chances are it might correct. All right. If it is showing strength and not correcting, that is good enough. But in case if it starts, this is what is going to hurt those companies big time. The one who kind of buys it at the top might even see a 30 40 50% kind of correction from those levels, right? So to be honest, the fundamentally weaker stocks tend to rally the most in a bull market, because as there is an economic expansion, what happens? Their operating profit margins also increase. If you look at the percentage wise, much better than something that has already been doing well, right? But these are the ones that suffer the steepest declines in the bear market, right? If a fundamentally not so great company has gone up 10x, chances are from that 10x levels, it might lose 70-80%. That is, it again comes back to, let's say, a 2x for you from the start of this run. So that is what we have seen even in 2018 to 2020 correction. So this is something that you have to be careful about, and make sure that you stay in those stocks which are fundamentally very strong. All right, because usually what happens, the big guys, they generally don't play in these fundamentally weaker ones. So due to that snowball effect, because of most retailers, operators would have gotten out at the top, and then retailers looking at the stock price correcting every day, one after the other kind of start selling it. The ones who are hopeful will keep buying it, but then it is just one way down, right? Why the fundamentally strong ones will not correct so much is because the since the mutual funds keep getting SIPs at some of the other, let's say 15% correction, again these mutual fund guys or the PMS guys would want to buy them, right? So the fall in them would not be as steep as the fall you would see in a fundamentally weaker one, right? Any questions here?
No, it's okay, sir.
Okay.
No, Sandeep, carry on.
Yeah. So what do we do in this period? Let's say it might stay for a year, it might stay for 2 years. We don't know. It is all about how the global economies do in the next 6 months, 1 year, right? How China starts growing, how bad the recession might be in the US. So all these factors are going to uh, play out, and we will kind of come to a conclusion as to when does the next market rally start. So to be honest, in every recession, the oil cools off to $30-40 a barrel. That is when emerging markets, especially India, starts its outperformance. So until that happens, maybe that is one point you can have in your mind, right? So if oil starts cooling off to somewhere near about $40 a barrel, that is when India will start to outperform, right? Money will start coming in, and you would see good growth coming in. So when does that happen? No one can predict, right? Maybe in the next 6 months it can happen, or in the next 1 year. So once you start seeing a correction, money starts flowing back into high quality names, right? Who can kind of weather this downtrend, as in they are not really expensive, and also their earnings growth is still intact, right? Then you would want to focus on those companies wherein this economic challenges are there, but they are still continuing. Usually, like the smaller companies, like Samit mentioned, right, the SME segment, because they are so small in size, even in, let's say, a contracting GDP, or let's say there is a GDP slowdown, those, because of their smaller size, can continue to grow. All right. So, and eventually, the market itself will tell us who the new leaders are.